Peter Lynch himself recently gave an exclusive interview to CNBC in which he discussed the current economic climate, the issues we should be focusing on, and how to make the most of difficult economic times. And for those who aren't familiar with Peter Lynch, not only did he pen one of the most famous books about the stock market, One False Move on Wall Street, but he also managed Fidelity Investments Magellan Fund for 13 years, from 1977 to 1990. Why do I look forward to his interviews with such anticipation? Because of this, to be honest. He managed the Magellan Fund, growing it from "You're ready for this $20 million to $14 billion in 1990. Welcome to the Financial Fortune channel, where we bring you the latest updates and insights on the world of finance and investing. Our aim is to empower our viewers with the knowledge and tools they need to make informed decisions about their financial future. In today's video, we have a special guest, Peter Lynch, who is here to share his warning about the 2023 recession. Peter Lynch is a well-known investor and former manager of the Fidelity Magellan Fund, which he ran from 1977 to 1990. He is also the author of several best-selling books on investing, including One Up on Wall Street and Beating the Street. I think it's safe to say that he deserves to be called a legend. But enough preamble, let's dive into this interview.
So let's talk about buy what you know. I'm so curious these days how you're thinking about the economy.
Well, I think people, they're investing in individual stocks. It's sad they're careful when they buy a refrigerator or an airplane flight. They're careful with their money, and they'll hear about a stock on the bus, and they'll put $5,000 or $10,000 on it. They have no idea what they do. So you're really going to be careful. Look at the company, look at the balance sheet. What is the reason the stock should be higher? The sucker's going up is not a good reason.
Is your sense, though, that the style of investing that you pioneered is still doable and winnable today?
Well, I think looking for something different, looking for something that's a good story. I mean, who would have guessed TJX, a local company, would have gone up 50-fold, or Stop and Shop would go up 10-fold, or Analog Devices, or NVIDIA. I couldn't pronounce NVIDIA. So you have to find a company that's either a turnaround or a company that's going to grow, like Panera or, Family Dollar stores. I'm not saying that buys now, but that's what's made our, Sears is rolled over. So Kmart's rolled over, IBM slowed down. But we've had new companies come along. I mean, that's the nature. You have to be looking for new companies and look at the balance sheet. If you can add 5 and 5 and get reasonably close to 10, you should be able to look at a balance sheet and say, here's two depressed companies. They've gone from 50 to 3. One company's got $3 million in cash and no debt. One's got $3 million in debt, no cash. Which one are you going to buy? I mean, that's not too hard to do.
Peter, I watched you closely because I was in the business back then, and I don't know. Do you remember how many S&Ls went from mutuals to stock trade that you made just buku bucks on back then? I mean, I don't know if you missed any of those, and they were all big winners. They're all big winners. They were all big winners back then. What do you think of the financial sector right now and what happened? We saw with First Republic, and I'd just like to get your insight there since you were so good at that sector.
We had a terrible financial crisis in 1991. I think almost every major bank in Texas went under. Bank of New England, one of the oldest banks in the country, went under. It's like, in 08, 09, the banks were doing these no-doc loans and second mortgages and home improvement loans, and people are buying boats with it. Now the banks are being much more careful. So we've gone through other crises. Some banks will go under. 400 went under after 08, 09. Now we have stress tests. I think the banking system has improved. There'll be some companies go under. That's the nature of it. It's nothing like, imagine 1980, 81, we had double-digit inflation, double-digit unemployment, and people worried the Japanese were going to take over the world. I mean, we were hopeless. I mean, there's always something to worry about. I'd really, in my over 50 years of doing this, I think I'd be worried if there was, somebody didn't bring up something to worry about. That's the nature of the business.
I was joking because I'm a Reagan guy, and I was there. I started at Merrill in 1981, so I remember what happened. I remember my feelings in 1981, and I remember my feelings, how I felt by 1985. Ugly. And you had a tailwind. I had a tailwind because of what we did. We're not going to do that again. We're not going to cut taxes. We're not going to stimulate the private sector. We're kind of headed the other way. Did you have a tailwind? Will we ever have a tailwind again with this generation?
Well, we've had 13 recessions since World War II, and we've had 13 recoveries. Maybe we're going to have one. If this is a recession, it's probably the most predicted one ever. You know, I never know when we're going to go. I'd love to know the future. I think it would help. I'd be a better investor. I'd pay $5 extra for next year's Wall Street Journal. It would really help.
Right.
I cannot predict the future, but this recession is so expected, so predicted. Maybe it's coming. I don't know.
Stay true to our investing strategy no matter what the macro is throwing at us. It's also interesting to me that Peter seems to poke fun at all the worried investors out there. Peter says it's not that bad that interest rates have dropped from their peak of 9.1% during the recession to their current level of 5%, and the unemployment rate is so low at 3.5%. Recalling the 1980 and 81 recessions. He thinks that since we made it through the Great Depression, when inflation was 15, interest rates were 19, and unemployment was over 10%, we can make it through the Great Recession. So as an investor, don't get sucked into the panic and instead focus on the long term. As he said, there's been 13 recessions since World War II, and we've had 13 recoveries, and, in his experience, the only time to worry is when no one's got anything to worry about. Peter emphasizes the importance of owning companies with strong balance sheets during recessions. He highlights the importance of analyzing a company's financials, such as its cash balances, debt levels, and liabilities, to gauge its preparedness for a market downturn. For example, companies like Apple and Google have significant cash and short-term investments, which they can use to cover their short-term liabilities. On the other hand, companies like Royal Caribbean have higher current liabilities than current assets, indicating a potential risk during an economic downturn. Peter advises investors to watch the balance sheet like a hawk and look for businesses that are either growers or turnarounds. He suggests analyzing a company's potential for growth and assessing if it has the potential to bounce back from difficult times. In summary, investors should focus on companies with strong financials, low debt levels, and the potential for long-term growth. By doing so, they can make informed investment decisions that will help them weather the storm during a recession. Peter Lynch's approach to investing is to be cautious of the many opinions and information available during uncertain economic times, whether from fund managers, media, or neighbors. Instead, he advises investors to focus on corporate filings and financial statements, perform their own valuations, and construct a solid thesis on why a particular business will be worth more in the future. According to Lynch, investors should be able to explain their thesis in a minute to a 5-year-old to prove that they truly know what they own. This rule is essential to Lynch's investment philosophy and helps investors avoid acting on random information from unreliable sources. Do you have any thoughts or advice from Peter Lynch or his book, One Up on Wall Street? Share your insights in the comment section below. Thank you for watching this video and for tuning into the Financial Fortune channel. We hope you found the insights shared by Peter Lynch helpful in preparing for the upcoming recession. Remember, it's important to stay informed and take proactive steps to protect your financial well-being, especially during times of economic uncertainty. If you enjoyed this video, please like and share it with your friends and family. And don't forget to subscribe to our channel to stay updated with the latest news and insights on finance and investing. Until next time, this is the Financial Fortune channel.